David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world options training program. And we're going to do another really quick stock analysis. And we're going to look at a company called Virgin Galactic Holdings, also known by the ticker name SPCE. So I normally call it SPACE, but it's really Virgin Galactic Holdings. I think it's founded by the same guy that did Virgin Music and the Virgin Airlines. I think it's that guy from overseas in the UK. But it was essentially a SPAC, and then it turned into Virgin Galactic Holdings. And this was one of the first SPACs that really started getting a lot of attention in 2020, right after the market fall because of COVID. And what we're going to do is kind of look at it and try to get you to understand how my perspective from a long-term investment and also as a trader. This is not going to be investment advice. I don't act as a fiduciary. I don't act as an investment advisor. So I would tell you to just take my analysis, take my perspective, and then go do your own due diligence. But I want to kind of give you an understanding of how I'm looking at the company, because my perspective can maybe help you get a better perspective on it, because you don't just get your perspective and you're not making decisions just in a vacuum. So what we're looking at is a 1 year of this particular company. And what we're seeing is that, here is, right before the merger, right? Then we have a little bit of a run up. This is early. This is right before COVID. We see the traditional dump on the chart because of COVID. And then it traded, in the, high teens, low 20s. And then what we're seeing is that kind of later in 2020 started to really, really run. Ran up. It closed at 54.53, which was the top. And then it's been falling down ever since then. So on 2/8/2021 till now, it's lost, $30-$40, right? And we had some, fairly red weeks because these are 1 week candles. So you had a whole week where it was red, another whole week where it was just red. So it sold off really, really hard. And one of the reasons is because a lot of the really high profile initial investors started pulling their money out of the company. And the reason why they did that is because most SPACs are just pump and dump schemes, in my opinion. They're not legitimate companies. They're really a way to take a shell company public by acquiring another company, adding a lot of PR to it, getting a nice little bit of return on your money. And once you hit the lockup date, getting out, or once you hit a particular share price in which you feel comfortable exiting, you get out. They're really not, a lot of times to me, designed to actually create a legitimate company, right? Because you see some SPACs that are just based on like experimental technology. However, with Virgin Galactic, if you believe that this company can do what they do, and so let me give you what their actual offer is. They're kind of doing like luxury flights, right? Where they're going to be launched out of another plane. I think they're going to fly through, a part of the atmosphere that's going to be essentially very low gravity. And they're going to pay people. People are going to pay for that particular experience. So this is like an event-based offer, similar to like a cruise ship, where there's an actual event that the company organizes. You pay to experience the event. You're supposed to have a good time, and then that's going to be it. And then I also heard what they're going to do is similar to, if you old enough to remember, what we call the Concorde, which was like a supersonic flight in which you could go in a very long distance because of the speed at which they flow and where they fly in the atmosphere, and get there in a relatively short amount of time. And those were going to also be from a luxury standpoint. So their supersonic flight is going to be like a luxury offer. And they're also going to have like the experience, what it's going to be in space offer. So they're going to run these two offers simultaneously. And that's kind of how they're going to drive the company. However, the challenge is that they have never driven in any revenue. So they haven't actually been able to execute on an actual flight as of yet. They may have done some pre-sales, but when you look at their statistics, what you see is that they've never really driven any revenue. So they don't have any revenue per share. So what they're doing is they're just raising money to run test flights to, I guess, get to a point where they feel comfortable actually putting customers or clients on the actual flight and then them taking off. So we're still pre-revenue, right? And so when you're listening to an earnings call, all you're going to get is a lot of projections of what they're getting ready to do in the future. So in my opinion, if you're in Virgin Galactic, this is maybe a 10-year hold. They may be able to figure this out. They may be able to build an audience around this particular offer, because to me, the space experience offer to me is not, I don't really see the value of that offer. I think the supersonic flight offer that's going to be 100% luxury has to be the offer but you have to be able to get the right clientele, and you got to try to figure out a way to make it sustainable. Because we're looking at the Concord. One of the issues is that if gas prices rose, it just didn't make sense to actually perform the flight. So I think that's going to be the biggest challenge. How do they build this offer out? How do they get the right clientele? However, I'm still not 100% sure that this needed to be a publicly owned company, but it was a SPAC. So the whole goal was to take this public from the gate, right? So that's the issue. So the reason, like if you look at like Bugatti's not a publicly owned company. Ferrari is, but Bugatti's not. Bugatti's a privately owned company. They sell a certain amount of cars that they sell and they keep it moving. Okay, so now we're going to talk about the traders. One of the biggest challenges is that this is a very news-driven company. Why? Because they don't have any revenue statements. So now, because most of the top has come out of this company, what you may have to start doing is looking to scalp. So we got news that they're coming out with a particular flight. I believe this weekend, it gapped up and it's just been selling off from the gap. So this is the 1 minute. Let's go to the 5 minute chart. It's been selling off from the gap. So it gapped up this morning and it just sold off. So as a trader, you short the open or you buy puts at the open and then it just sells off and it comes right back down to you. So let's see over the course of the day if it actually fills this gap, right? Which is looking like what it's trying to do. So as a trader, you got to be really careful. This is very much a news driven scenario because they don't have any revenue, right? So you may want to start looking at maybe potentially scalping it. I'm really concerned that you're not going to really get, as of right now, a really decent long-term trend, right? We had some of that later on in the year, right? We had that now early this year where it started moving down, but it's going to be difficult to try to figure out what is going to be a long-term trend for this as a trader. So trying to swing trade it, whether using options contracts or shares, can be difficult. Not impossible, but can be difficult because we don't really understand what direction they're going in. So this may be a scalp opportunity, which is going to be, for some people, more difficult, more technical. But I just think that's where the real opportunity is going to be at. So this is going to be a real basic breakdown of Space Virgin Galactic Holdings. And I want you to always look at this and realize that we're now back in like the $19, $20 range, which is where it had been at before for a very long time. And this is what we're seeing now with a lot of these SPAC companies. Is now a lot of them are trading back right in that particular range. A lot of them are trading in the under $25 range after they've run up really, really hard and fallen back down. And then we're going to try to see how long they can last before they just totally just start to lose a lot of volume and start losing any trading activity. Because I think that we may be hitting a end of the road for SPACs. And what I really believe is that they're probably going to get rid of them for a while and then bring them right back. The market will create new ways to become profitable or to drive new capital in the new markets because there's more capital in the market than there are ways to get a return. And so they will invent new ways for people to get returns on capital. So that's going to be a side story, but I want us to continue to observe that. So if you got any questions on space, let me know. I wanted to give you just a really basic breakdown. I would encourage you to look into this yourself, maybe listen to some of their earnings calls, try to figure out what direction that they say the company's going in, and then understand that as of right now, this is probably going to be a news-based company. There's not a lot going on behind the scenes from a revenue standpoint, from an operations standpoint, that's really going to allow this company to really show you anything because they're not there yet. So this is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job. Talk to you later.